Very well. What a day. What a day today. So I hope everyone is good and still alive without scars after a day like this. What a day. So let me open the chat here and we start. Welcome everyone. Today is March the 10th, 2016, and it's 7 p.m. This is a new session of the FS Street Tokyo Open Live Room. Welcome everyone. I'm opening the chat and off we go. What a day. I hope that you are all safe and had a interesting day. Very difficult day, very interesting. And we're gonna comment a little bit on it and what happened and what we were looking for happening and what then happened thanks to the power of words. So welcome everyone. Welcome Todd, Peter, Desi. We have Mervin, Gary, LP, Adrian. Hi, Gary, Roland, Adinda, EDGFX, and I see Marco. Welcome everyone. That today was a strange day. It's an understatement, and I would agree with that. Super Mario made it again. Hello from Italy. Ciao Marco. So very well. Hello from Canada to everyone. Welcome to this FS Street Tokyo Open Live Room. It's a daily show where we feature real trading. We face the market. We try to anticipate what's going to happen in the market. Sometimes the markets anticipate us, anticipate our ideas, as I'm going to show you as it happened today. All this happens at the very heart of the Asian session. With me, I'm Giuseppe Basile. Welcome. I'm also known as the FibStalker, and this is a daily show from 7 p.m. to 7:45. Typically, we do 45 minutes or 50 minutes, sometimes 1 hour. It really depends. Super Mario did it again today. Let me say hello to you. I hope everything is good and I hope you're safe. Interesting time, interesting day today. Let's go, and before we get into charts, I just want to make sure that all of you are okay. That's important. And what I'm going to do before we get into that, let's talk a little bit about risk. As you know, risk, it's very important. I really take risk seriously, and you can ask around. Really seriously, trading is all about managing risk. And there is nothing to add. Case closed. You are capable of managing risk, and you actually have almost everything you need to become successful. So trading Forex and its derivatives, futures, options, and CFDs and other instruments with retail off-exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as can work against you, and it magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FS Street risk disclosure on the website. The information, including the commentary and trade ideas and analysis behind this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. I provide information here merely for your general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated and FS Street, will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. Okay. When I give levels and talk about potential participation, I always double check and test the participation in those levels. So I never buy or sell blindly those levels, nor you should do. it, and if you lose money because of that, and because you don't manage this properly, and that's the only reason why you would lose money if you do, I cannot be responsible for that. Okay, so welcome everyone. Joe is in, LP, new faces here, Jax, Mario drinking alone tonight, I think. Actually shorted the euro dollar prior to the news, but got out before the whip. So that was actually a great move. I was not able to do that. Good evening. So good evening, Adland. So welcome everyone. And again, for those of you who are new, this show starts always at 7 p.m. So now let's move into our charts and let's look at today's madness, because I have no other ways to define it. So let me see if I can bring forward my charts here. Here we go. And there are no charts. Oh, so let's see. We're going to get our charts one way or the other. So give me just 1 second here. And of course, I want to start from the euro dollar today. What a day. Look at this. Look at this huge bar there. So I just kept doing what I was doing, of course. So as I mentioned yesterday, the last 2 days, I was looking at this 110.50 level for a short, and I kept that short. And obviously, in the morning, I was very happy when I saw this market at 108.30. So my conclusion was, and it's certainly true that some of algorithms or some smart money were actually positioned in the right way. We saw that initial participation the day of the setup, and that was March the 8th, and then the next day the market started moving lower. And today in the morning, during your overnight and overnight for the US session, so I should say for the for the US session, but during the European session, we saw the market moving lower. There was an initial reaction lower, which is very clearly visible on the 30 minutes here. But you know the story. So the market continued lower, respected that setup we had on March the 8th, around the 11 here. And then there was this jerk reaction after Mario Draghi gave the best of himself. Could I anticipate this? No. And I was not watching the market. I had my stop in, and I was simply stopped out. Now, this behavior of the market here is it's typical and remind us the importance of having stop in place, because I respect any style, but my style in this case was to follow up on the setup that I got. I don't change my idea, very easily, and I don't mind being stopped out once you have a risk-free trade. Okay, so that's the whole importance of letting the market move and at the same time protecting your capital. Because see, if we try every time to guess what the market is going to do, we will never leave that trade moved to completion. And I know that lately there have been examples where that didn't happen easily. But in the past, we also had the examples when that happened very, very easily. I remember the US dollar Japanese yen trade back a month and a half ago. And so this to say that when the market moves lower here, and again, let's look at the smaller time frame. This market could continue lower. We didn't know. So it's easy to say, oh, well, the right decision was to exit. Of course, the right decision was to exit. In hindsight, yes. The point is that, and the reason why I'm not worried about being stopped out once I'm protected, is that if I don't let this market move and express themselves, I never bring this to I never bring these trades to targets, which is what I want to do. So congrats to all of you who are short and were able to exit before the move higher. The only hint or the only target that would have helped you doing that was to exit at previous lows here, right? And probably there are some of you who did that. I have one of the exit strategies that actually exited at the previous lows. Was I using that exit strategy now? No, because I wanted to, and I believed that this market could actually, based on the setup that this market gave us a few days back, well, the couple of days back here, I was looking to bring this price lower into that target. Of course, now, this move does not make sense any longer, right? I mean, clearly the bears were not capable of holding Draghi's words, and so we'll need to reevaluate this market and see what this market is gonna bring in the future. Now, the picture is a little bit skewed here because of this long tail here, but as this market normalizes in the coming days, we'll be able to actually understand how algorithms are going to reposition themselves after this move. Okay, so as usual, I'm not worried about having the market moving like that, like this. The problem is when these markets move like this and you're not protected, and that's I believe today a lot of people lost money because they were not protected, because they were not they made assumptions on how this market should move, and they were not protected. In this room and elsewhere, I heard different projections for the euro dollar. They should go at parity, or should go even 0.80. Imagine those people who believed that this market should move to 0.80 or to parity and were not protected today, because they were assuming that that stat was still ongoing. That's really scary to me. But I read very good comments here. So good evening all. I read shorted the euro dollar prior to the news, but got out before the whip. So I have Jax, very well done. I caught the retrace, very well done there. I was hoping for 300 plus pips, all said and done. Got out with 120. Well, it's not too bad. Then I got scared and took a nap. Well, if we don't know what's going on in the market, it's better to stay away. And honestly, here, like if you look at this market, it's no structure to me. It's just a screaming, crying higher without with a lot of structure. Now, in reality, if you see these retraces here, they show you on the smaller time frame that there was indeed some sort of structural retracement. The point is, the higher the volume and participation, and the better the smaller time frame are, and the more the smaller time frame are technical, meaning that responds to measure move. However, in a time like this, I have a rule: I never trade in a time like this. In the past, in similar situation, algorithms were positioned in already before, and the news has actually confirmed that position. And I believe that at the very beginning, the news has confirmed that position, because if you look at the content of what happened today, is basically Europe has decided for a lot more QE, and now one should ask, is that positive for the currency? Of course, everything is relative, and this is the euro dollar, and it's not that the dollar is in a better shape. But obviously, Draghi's words have played an important role here, and that is the ending result. So I have some more comments there. Super Mario poked Euro bear. That's correct. Risk management is key. Todd is reminding us. So going forward, what can you say about this market? Well, first of all, let's look at the weekly here, and while we were looking at a continuation lower, and we had some reason for that, because this market has been in a lateral move forever now. I mean, since March last year, and it's basically has been on this larger time frame on a lateral move for 1 year. And our analysis shows that the weeklies are not interested in pushing this price lower, but the dailies were, and in fact, they also had a setup there. However, what happened today, clearly negating the negation of that move, it's non-technical, just came out of a market that was already moving lower here, and was reversed only thanks to the perception that has been generated by words. Now, that said, I don't have a lot to add at the moment in this market, because of that huge tail that skews everything. But it's interesting to notice that if we consider a trace like this, and definitely there was a group of algorithms were attached to this, we can see that the move ended around that second target. So if this move is going to continue higher, believe it or not, if it retraces into that 111.40 area there, that's the level where the profit taking should end, and this market should continue higher. Into what? Into 113.14. So we're talking about here almost another 200 pips. And this setup could be given tomorrow to us during the European session tonight. Now, should that happen, this market is going to continue higher. I mean, this market has broken the back of the bears now. Before the bears kind of regroup and try to short this market again, if that's the intention, it's going to take some time. So to me, for now, I believe we have to revisit the previous highs. And I say I believe because this is more of a belief than a proof. And the reason for that is I cannot do any consideration because of this tail here. As this market is going to, and that's my personal view based on the method I use. But as this market actually evolves and price evolves and the market stabilizes, we will be able more and more to understand how algos are going to be played. So if the algos are going to use this anchor here, we should not see price moving below 111, 15, 16 in the coming days. And if that area holds, we're going to see 112, 38, so 153, so 120 pips above, and eventually 113.14 to revisit previous highs. Okay, so this market is extended on the daily as well as on the 4 hour. I believe in the 4 hour it's very clearly visible that this market is indeed extended, and so we're gonna use extension rules to model these markets. All right. And that means keep in mind that level that I gave you. Any comments on the euro dollar here? You want me to say anything else? You have any questions or things that itching hands and willing to short this market? You should destroy, you should totally suppress that will if you want to think in your mind that you're going to, after this move, you're going to successfully short this market. I don't see that. It can happen, but before that can happen, because anything can happen in the market, but before that can happen, we need to break 111.18. All right. So if you have any doubts that you'd be short in this market, you should be prepared for that. Hold on those itching sell button hands, and actually wait for that. Of course, another market that, of course, I'm very interested in reviewing is the US dollar Japanese yen, because you knew what I was anticipating. And again, in the morning, everything was fine. Everything was right. Because see if, and let me go back just very quickly. That's a very good question. So Melvin is asking, okay, so do we expect yen below 111? And the answer is, it all depends how the euro will react here. I'm not looking for an immediate reversal of this market, but clearly, if the euro has started its move higher into 122 from here, because that's the level where we could get, then obviously the US dollar Japanese yen is going to continue lower without giving us an opportunity to enter this market at the levels we were looking at. Because as I was mentioning, thanks Melvin for observing that, because it gives us an opportunity to talk about it. Now, if this setup that we have taken and the market has respected, the bears have participated, and everybody was happy before today's incredible move. If this would have worked, this market would have gone with little doubt into 107.20 and even lower. That would have pushed price with the Japanese yen higher. Now we have to reevaluate. So the short answer to your question is yes, that can happen now. And it's unfortunate that this market is actually offering, well, it's not offering in reality any opportunities to enter and at the same time manage risk in the right way. However, this market, whether it gets to 116 or not, has to move into, as we know very well, 170, believe it or not. And so it's just a matter of how it's going to do that. We had this double bottom here with a hope to push this price higher into 116.30, but that might not happen now. And that's the consideration that I read there. Welcome, G. I don't know who G is, but I don't know if it's me or someone else, but that's really not that important. I know I see that I refreshed here the window. I have a few other traders here. Welcome, Scott, LP. We have Peter as well, and Roland, Pank, Ivan Kai, Lorne, and so I'll just continue here. So short answer to your question, Mervin, yes, we can actually get below this 111 now. Of course, it all depends how the euro is going to behave. And as we had a very good bet here, and in fact, we were able to capture risk-free trades here, a risk-free trade. And so when the market stopped us out, we only paid the cost of trading, which is transaction plus slippage. Obviously, in this trade, there was a little bit of slippage in the stop, but not that much, at least based on the data of my broker. So we will need to evaluate, and we will see what happens here. What is going to happen here? And this cues the view in the very short term. But as I mentioned before, as the market stabilizes and price become more stable, and smart money and algo reposition themselves, we should see more stability, and it's okay. That can happen, and it's part of trading as well. Of course, Euro Australian dollar and Euro Canadian dollar have behaved in a very similar way, breaking an important area we were observing. So again, also for this market, we will need to reevaluate. And I believe these markets have the technical picture for this market. It's a short rather than a long. See, Australian dollar and Canadian dollar are not in a bad shape as the US dollar, I believe, and with all the due respect to all American people, but it's an objective observation. And I think US dollar and euro are not in a good shape, and that's demonstrated also by the amount of QE that has been run in the past and is going to be run in the future. But Australian dollar and Canadian dollar, although the Canadian economy is not in a good shape, I don't believe that these two countries or the currency of these two countries is in the same situation as the US dollar. But this is just opinion, and as you know, I don't trade opinion. What these charts are telling me is that there was, and I believe there is still, because that's been confirmed only 4 weeks ago, a pressure in this market, and particularly I'm talking about now the Euro Australian dollar on the downside. So whenever so the Euro Australian dollar is not the Euro dollar. Whenever this is going to stop, I still believe we're going to see a reaction lower. And one level I like to mention on the weekly is the level that actually has played today. So if this level, the 150.60, is going to keep behaving as resistance in this market, we are going to see a reversal and a continuation lower, believe it or not. And this can happen even if the euro dollar continues higher. Okay, so I think 140.73 is still in play here, and this level, the 150.60, if retested successfully, retested as a resistance successfully, could actually push this price lower. All right, and so what Draghi brought here today, and Pankaj is saying fireworks from Draghi, yes, and exactly Pankaj, and what he brought today here, which was a stop out for our short position in the euro dollar, might be indeed an opportunity. On the other hand, for the euro Australian dollar for a larger retrace. And on the daily, we have a little slightly higher level of 151.35. So we will see what happens in this market. We're going to observe these two levels, 150.60 and 151.30, and we're going to see and study whether there is a reversal in these markets. Okay. Before I get into the Australian dollar, US dollar, let me review the other euro-related pair, Todd, and I will get to the market that I will cover for sure today, along with the SP 500. Let me comment briefly about the Euro-Canadian dollar that actually had tested, sorry, let's look at the daily, had tested twice the level that I had indicated before the fact. The level was there 2 days before the first test, 4 days before the second test, and actually has pushed price into that first target. Can you see it? The reversal in this market came after arguments were capable of pushing price into that first target, take profit out, and then let the market move higher. So now this market has retested also the weekly long, so we cannot anticipate shorts to start working. Sorry, I should rephrase. Anything can happen in the market, so there's nothing we can really anticipate. But this market has now confirmed for the second time, even if that happened on such a strange such a strange way and occasion, whereas this market has been reversed by words, but this market also shown the second test of a weekly level. So I'm not going to battle against this market unless and until it shows me that he wants to reverse. Okay, and so each situation is a little bit different, because we can certainly think of the euro to think it as stronger all over the board, but reality is that we have to consider each currency and the euro against each other currency. And what I see here is a continuation for now towards 151.45, which could actually match in the euro dollar a revisit of the highs here, as we spoke before. Okay, one of the scenarios that we gave before. All right, and that's something I wanted to mention. It's anyway proficient to consider each and every of these markets as separately and just look at what they are telling us in one specific moment. And always, and I believe today is a proof of that. Let's trade, having in mind that the main objective should be that of generating risk-free trades. I don't think about gains, and I rather think about generating risk-free trades. And every time I catch myself saying, "Oh, this trade is working well," and I start thinking about gains very often, not always, but very often, is really when I should tighten my stop and sometimes take profits. And I felt like that today in the euro, and imagine what happened. So and we will touch more on this in the future sessions. I have a lot to say about that. So Australian dollar, US dollar, we still have time here. And after that, I want to review Australian dollar, US dollar, rather, which is, no, I'm seeing this here, but I should not be seeing this. So Australian dollar, US dollar, as it's quite an interesting market here. Let's look at it. This market has continued higher, so this would have traded a few days back. Then the market went in the first target and second target, and we were looking for a deeper retracement, but that retracement never came. Okay, now it doesn't mean that it's not going to come, but so far it did not come. I always look in these situations, and there are reasons for that, to a deeper retrace. So my deeper retrace here is within the 0.7392 level. Some people will say, "Oh, well, Giuseppe, but that's that's just a previous highs." Yes, maybe, but that's not the way I look at these trends. That's not the way I study trends. Okay, so for this market, we are still in longs. We have no reason to believe that the Australian dollar is suddenly going to become weaker against the US dollar. And I believe that 73.90, 74 is going to be the area where this market is going to come, and it's the area that we have to test, Todd. Okay, so we will test this area for continuation longs. Our system is a trend following system, and that's what we're going to look at. And this continuation long could actually push price much higher, and this could be an opportunity that comes in play tomorrow, on Friday, or on Monday, and this would be a great opportunity to take a long into 76.93, which is basically 300 pips move. That same 300 that we never got in the New Zealand dollar, US dollar, but I don't want to open a discussion on that because it will still require time. I'm just going to show you here that although this market was pushed lower, it's still in this move higher, correction on top of support, and believe it or not, the 68.50 it's not in play. FX ambassador, you know, if you say that a market is going lower, I respect that, but you have to explain why. So that's not enough. Sorry. I'm explaining you why I see this market moving higher. You have to explain me why you see it going lower. Just saying it's going lower, it's just an assumption. All right. I respect that, but you have to motivate it. Otherwise, it is just an opinion, and we don't trade opinions. All right. Now, I wanted to show, and I don't say that. I just say that to state my beliefs, not to necessarily say that could not happen. That could happen, but I need to have an explanation for that. I don't see that happening at the moment. And that's a good observation, though. So let's look at what are the conditions that could make that happen. And the first condition has to present is the market moving below 0.7360. Okay, so I don't see that happening at this stage. I have no reason to believe that was going to happen, but anything can happen. And for FX ambassador to successfully short these markets, if you believe it's going lower, I suppose you're also trading it lower. It has to break this level. Just saying, it has to go lower, it's not enough. There has to be a motivation that it's grounded in ways the market works. So I'm happy to hear that. All right, so let me close very briefly with the dollar index and the SP 500 because we had interesting developments on those two markets as well. So dollar index first. The only clue we had that this market could move lower was given by the dollar index that respected this area short, and the market entered again into that short when the market, the euro dollar moved lower to retest the previous lows, and then was pushed lower. So if this is real, this market has a target below here, which would keep pushing the price of the euro dollar higher and possibly the price of the US dollar Japanese yen lower. And this would be, when we get to this 94.50, it's going to be the seventh test of the dollar index of this area. Will it reverse? We don't know. But as the market gets into this area, there will be some profit taking in this dollar index if the dollar index continues lower. The other market I wanted to review, and then I'll let you go for today, is the SP 500. Now, the SP 500, everybody was happy. I was happy as well. And again, I was stopped out here in this trade. It was a finished trade, and so we don't know. I don't think this is a break, and it happened on news comments. In fact, the market then quickly reacted, doing much better than the euro dollar. If there is any relation between the two, obviously there is a relation between the two, because the US dollar Japanese is moving lower. Sorry, I mean, in reality it should be inverse, right? But really this relation, they change in time. Now, if the relation between the US dollar Japanese yen and the euro dollar at the moment is inverse, which means if one goes higher, the other goes down. Of course, the US dollar Japanese yen going down, and so the Japanese yen becoming stronger against the US dollar would mean that the carry trade has some constraints. I wouldn't say is ended, but that would be the constraint. So if that was the case, this market should reverse, right? After what happened today. Now, I want a confirmation for that. So I believe that I believe two things. I believe that this market can continue higher, and unfortunately, will do it without me because I was hoping to, take profits around this 237 here, and for this market to reverse, we need to see 1959 be breached on the downside seriously here. And that would give us a confirmation, and so then we could enter these market shorts on a retrace, all right, before this market gets into the next potential level. And one of these levels will be 1919. All right, so let's do a quick time check. I'm gonna start a summary for this review right now. So we started from the euro dollar, and we commented on today's mayhem here. This market initially moved lower to retest previous lows from 110.50. This was the signal and positioning of algorithms we identified before the facts 3+ days before, and the market moved lower accordingly. And after that, Draghi has talked the euro dollar higher, and we're going to see now, very probably, we're going to see a continuation higher into previous highs, at least, if the market respects the level that I gave you here. I gave you the 111.40 here to watch. This market could be tested tomorrow or on Monday. And if it tests successfully, it's going to push price higher into 113.16. We reviewed, of course, also the US dollar Japanese yen. It was asked during this video whether we're going to see 111. That's very possible at the moment. And it will all be decided whether that area from the euro dollar that I showed you before will hold or not. If we'll hold, there is still a hope to see this market into 116.34. If not, this market could break the lows, and in that case, we have to capture this market in a different way, because I believe this market is going to move into 170. I also commented on the other two major related to the euro that I follow, the euro Australian dollar, as well as the euro Canadian dollar. And this market, what I mentioned is that the euro Australian dollar, it's to me, it's still a short. We just need to find what is the resistance level. And I showed two resistance levels, one of the weekly 150.60 and one on the daily 151.40, that could actually contain this price and reverse this price again. The euro Canadian dollar, it's a little bit more bullish because it has tested for the second time a weekly level, and I see this market at least moving into 151.60. After that, we briefly comment on the Australian dollar US dollar, which is still bullish. It's not a short. It's going to be a long at 0.73 over 74 here, and it's going to be a short only if we break the 0.7360. All right, so I'm going to look for a long in this market next week or tomorrow. If we test this level, hopefully we're going to get an opportunity to trade this market long on Sunday evening for a test of this level, and hopefully a risk-free trade in this market, which is the only thing that we are looking for. Finally, we close with the dollar index, and we show that the dollar index was the only clue for a continuation lower. In fact, the dollar index was trading already a short here, which was actually confirmed today after retest of that level, the 98.10, and the SP 500. Unfortunately, the SP 500 also stopped us out today because of that jerky move that was actually imposed or generated by Draghi. And what I'm looking for in this market is a retest of this 90.66 and then a continuation, possibly continuation higher. If the 19.59 is on the downside, we're going to see a move lower, and we're going to short a retest to see whether this is the start of the bear market. We just started a trace before a continuation higher. All right. So guys, thanks a lot for being here. I hope this was interesting. I hope this was useful too, because the whole purpose of all this is not to talk about the market, but to give clear direction of what could happen next. I love doing that. I love doing that for myself, for my own trading, as well as to help other traders, or to steer based on the way I look at the market, to steer you in the right direction. I think that a lot of these considerations are really helpful to actually position ourselves in advance in a direction which is very often a high probability direction for the market. I also want to remind you that I will start recruiting for. I already started recruiting for my next session of the coaching program, which is going to be in May, and it's going to be self-study first, 14 live webinars, one per week, starting from May, and then a consolidation period in which I'll have you also participate into my private room, where we put everything together, and I show the timing, and I show how all these concepts work together to give us foolish trades as well as profitable trades. So if you're interested, by all means, you can take advantage of the offer that FibStreet is giving here. There is a box above the video. If you're interested, let me know, and if you need more information, just contact me. I'd be happy to provide all the information you need. That said, I want to wish you, it's Thursday today, so I want to wish you a great weekend, a rest after this week was very, very long week, tough, not really a lot besides today, but it is what it is. Whenever we are stopped out from risk-free trades, I pat myself on the back and say, you did it right, and the market did not behave as you are anticipating. But whenever you get a risk-free trades, it's good. So thank you, everyone. Thanks, Lon. Thanks, Todd. And manage risk well, everybody, and happy hunting for sure. You're very welcome. Enjoy your weekend all, and have a great weekend. And to everyone, thanks for being here. Peter, Mervin, Todd, Lauren, LP, Lee, hi Lee, Joe, Desi, hi, FibStalker, which is me actually, Gary, Roland, Pankai, Adinda, EDGFX, and Jax. You have a great weekend, and I'll see you as usual on Sunday. I will see you to start the review of another interesting week. Every week is interesting, basically. And I'm going to see you on Sunday at 7 p.m. Then you enjoy your weekend and rest, and have a great day tomorrow. Okay. BOJ will be next week, so it's going to be interesting. We're going to see how Japan is going to respond in a way to the dragging moves, if there is anything that I can do actually. All right, so thanks a lot, and again, I'll see you on Sunday, 7 p.m. If you like the show, tweet about it, retweet my messages, retweet whatever tweets about it. If we do that, we can keep the show. We can keep doing this analysis. We can keep high the exchange and conversation, and any questions you might have. I never shy away from answering questions. I always like to be challenged, because when someone is challenged is when someone can actually learn something. It's not about defending my views, it's about learning as well and objectively observing these markets. So thanks a lot, and have a great one. Bye-bye now.